Hello there, friends. My name is Carlos Scarpero, and I am a mortgage broker here in Dayton, Ohio. If this is your first time here, check out my YouTube channel. Be sure to subscribe for more information about things mortgage and housing related. I'm recording this video in July of 2020, and right now here in Ohio, we have a hot market. One of the hottest markets we've ever had. We're actually getting national recognition for how hot our market is. And so right now is a great time to sell your home, especially, and even buying a home, because right now here in Ohio, we have incredibly affordable housing, even with our hot market. And because of that, it's getting very, very, very competitive out there. So I want to give a few tips about how to win a bid in a competitive bidding situation. Because what I've noticed on the loan officer side, and as I've talked to different realtors, that it's not a question of if there's going to be a multiple offers on the house. It's a question of how many is it going to get? How competitive is it going to be for that dream house? And I've done some research. I've talked to some realtors that do this quite well, that are really good at winning bids, and then I've talked to other realtors that are not doing so well either. And I've seen a few differences, and so I want to go through that real quickly with you. So the first tip is, as a borrower, you need to be prepared. You can be calling me or another loan officer ASAP as soon as you're thinking about buying a home, and have those pay stubs, W-2s, tax returns, bank statements, all that good stuff handy well in advance before you want to put in your offer. What I'm seeing happen, unfortunately, is a lot of people don't want to deal with this type of thing. And they put it off. And then finally they find that dream house and they say, I'm putting in my bid now. And I say, well, that's great, but I can't issue a pre-approval letter because I haven't seen your pay stubs. Then they mad scramble to give me that stuff. It takes 2 to 3 days to do that. And then by the time I get that approval letter to them, guess what? The house is already under contract with someone else. So you definitely need to be prepared. Talk to your loan officer early, well before you think you're buying a house. And even if you're not ready or you don't think you're ready, let me determine if you're ready. Let me help you. We can determine that together, actually, but let me determine from a qualification standpoint whether you're ready. And if you in your heart don't feel you're ready, that's a whole different story. But from a qualification standpoint, let me help you determine if you're ready and the steps you need to take to get there. Next thing I want to talk about is teamwork. Having a winning bid is a team effort between the loan officer, the realtor, and the borrower. It's happened so many times, and I don't know why, that the realtor decides to put in a bid, doesn't even tell me, not really coordinate with me, and then the borrower gets ticked off because the payment's higher than they thought it was, the money they need for closing is not what they thought it was, or they're asking for concessions and other things that I don't even need. And oftentimes, because I'm pretty connected here in the Dayton community, oftentimes I know that listing agent, but I can't make those calls and make things happen unless I know exactly what we're doing. We're on having a team effort here. And because I have noticed that if I know that listing agent, I can make that call, and I certainly will make that call to that listing agent to let them know that the borrower is a really strong borrower, that I've pre-qualified them, and that it's going to close quickly. So teamwork makes the dream work. And the next thing I'll talk about is speed. Right now, in July 2020, rates are incredibly low. We're hitting record lows right now. And a lot of lenders can't keep up. There's just so much they can do. The processing and the back office staffs are overwhelmed, and they are hiring like crazy and can't keep up. And so for many lenders, there's a speed issue. And you need to really be cautious about who you're working with right now, because some lenders just can't keep up and they're asking for 60 or 90 days to close, or even worse, making you think you're having a 30-day close when in fact it is a 60 to 90-day close, and then everybody's upset. So keep in contact with your loan officer, whether it's me or someone else, of what is the speed, what is the realistic speed to get this loan closed, to get this loan from the contract date to the actual closing table. Luckily for me, where I'm at, for someone with really strong credit, we can do a 21-day close. If the credit's a little more challenging, it will take a little bit longer, but I will tell you all of that well in advance so you know exactly what you need to do. Speaking of that, good credit. Good credit is more important than ever right now. There's really multi-tiers of the marketplace. So we've got the 640 above borrower, it's the 640 to 800 borrower, and then we got the 580 to 640 borrower, and then we got the 579 below borrower. So for people that are 640 and above, the changes have been minor. We will look at a little more deeply at employment history and that type of thing. Other than that, you've got a lot of options in terms of places you can go look and places you can apply for mortgages. And I'll certainly put in a very, very competitive bid price in terms of pricing and fees and that type of thing. And more importantly, speed to close, we just mentioned. If you're in that 580 to 639 range, it's much more difficult. We can still broker because I'm a broker and I got a lot of options. We still can broker that out. But keep in mind that time to close is much more difficult and we're going to ask a lot of questions. So keep that in mind. And if you can get some credit repair, which I can help you with, or I can refer that to someone to help you with, I should say, that will be very helpful. Now the 579 and below bar, that's always been a tough situation. We've had a few options in the past where you can put more money down. Those options are pretty much all disappeared. If you're under a 579, just forget it. You need to go get credit repair. No ifs, ands, or buts. Just get credit repair. And even if you're 580 to 600, 640, I mean, if you have time to get credit repair, that's better just because it will be a lot more beneficial in terms of interest rates and fees and that type of thing. Next thing I'll talk about is seller credits. So seller credit is where the seller contributes towards closing costs. Those have always been common in the past because many borrowers don't have enough money to bring to the closing table, and seller credit helps bring the cash close down because you can't. It's kind of a backwards way to finance the closing costs. So what you do is say you're buying a house for $100,000, and say the closing costs are $4,000 in an example. You would make the price 104, seller would get 100 even, and then that 4,000 is basically financing the loan. And so those are called seller credits. Those are getting much more difficult to come by. A lot of times sellers are worried the house won't appraise, and in a multiple offer situation, they're just gonna take the offer that doesn't have a seller credit on it, just because, for numerous reasons. One, for appraisal purposes, and the second one, and more importantly, is they see a seller credit and they get concerned about the stability of the income of the borrower, and they may, because we can't show the credit score on the pre-approval letter. Looking at seller credits is one way they can look at it, and they see a pre-approval, and they're in that contract or the bid, they're asking for a ton of seller credits. They're maxing out the available credits. Then it's a red flag, and sellers will see that. Listing agents will recommend not taking that offer when there's multiple bids on the table. Next thing I want to talk about is escalation clauses, and this is more an advanced realtor technique. So with an escalation clause, what happens is that the bidder, or the realtor, I should say, on behalf of the potential buyer, says, I'm going to match every offer and beat it by $500. It might be $100, it might be $500. Depends on the terms. Typically, it's about $500 is the differential. So say one guy bids 100, and this guy says, well, the bid will be 100,500, and they'll put a cap on it. It's typically when there's an escalation clause, the starting price is always the asking price of the house. It's almost always an overbid situation where they know there's a lot of competition in the house, and so that's more of an advanced technique. And I don't know, a lot of realtors, some realtors use it, some don't. Some use it well, some don't. But the ones I know that are really good at executing escalation clauses as well do much better in the bidding process. So that's something you need to talk to your realtor about. Ask them if they've done escalation clauses often, and see if you can get that set up in your bid. Finally, I'm going to say work with a local lender. I don't care if it's me or someone else. Work with someone in your local community, and for numerous reasons. One, we are invested in our community. We want to see you in that house because we know that we'll get referrals from it. I had to see these people see realtors at chamber events. I have to see them around town. I have to see them at H7, which is here in the Dayton area. And the worst thing I want to do is face someone and have to tell them that I denied their loan when I said they could get one. So I want to make sure people are closing, and I want to make sure people are excited and happy to see me and say, thank you, Carlos, for getting me that deal. And I can get them more business. And so because of that, I take a little of extra care to make sure that my application is something that's going to close. And most local lenders are a lot like me in terms of their philosophies. Now, contrast this to somebody like Quicken or one of these big online lenders. Those guys don't care because they're getting lead after lead after lead. Oftentimes, they're only making a few $100s per deal, and they're working on volume, and they don't always want to take that extra time to make sure it's approved. It's easier to just shove them all in there, let underwriting figure it out, not ask those extra questions, not do that extra research, because they have so much volume and they don't care about referrals. So stick with someone locally, and I'm going to talk about this in another video, but price-wise, you'll find out that your local mortgage broker is extremely competitive with what Quicken and those guys are offering. So not only do you save money and close quicker, it's much more accurate and will ask for less stuff. And we're in your community. We're invested. We reinvest in where you live. So I hope this answers a few of your questions and concerns about doing an offer in a competitive situation. As always, I'm here for you to support you. I can be reached at 937-572-3713 or scarpero.com. Thank you.